The following program is paid for by EG Tax. All opinions or statements expressed on this program are solely those of EG Tax or its guests and do not reflect the opinions of News Radio 930 WBEN or Odyssey.
The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930, toll free at 1-800-616-9236, and cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes. And we're, believe it or not, you know, we're in the middle of September. Where did the year go? And so we have a special topic today that we're going to talk about. But you can call us at 8030930, 8030930, star 930 on a cell phone, or you can text us at 716-8030930 and ask us anything related to money and finances and taxes, and we're happy to help you. And of course, I got my buddies here in studio, Tiffany Fabian. Hey, Tiff.
Hey, happy Saturday.
Happy Saturday to you. What great weather, hey?
Yeah, it's tomorrow's the first day of fall.
Yep.
And it's like an Indian summer.
Yeah. And Christopher Fabian.
Hello, Esther.
Hello, Christopher. All right, so you were on TV yesterday talking about this big change that the governor announced. And so let's clarify that so that people understand what the big change is.
Sure. So on Thursday, there was this huge press release that Governor Hochul signed this $2.6 billion package to help tax homeowners with their property taxes. And, you know, people got all excited saying, oh, there's something new. This is great. This is great. But all it was the STAR program. They renewed it. It was nothing new. There's not an extra check being mailed out to people.
They did, though, to be fair, they did give that STAR money to everybody before this.
Right.
Yeah,
right.
we got
right.
it.
Right.
We got our check. My daughter got her check.
That they did. And then I think she made it more easy to obtain that money, correct?
Correct.
Right. They started a portal where you could sign up for direct deposit.
But basically, that's it.
Same thing.
Same.
Right?
Yes. I called her office. I called other senators, and they all laughed. They couldn't believe that they had this huge press conference about this because
about
there was
something that they're already doing.
Yep.
Have already done.
Where
we just wanted to
think-
make sure everybody understands the smoke and mirrors, and so we're showing you behind the curtain, except for the portal that you can go in, and if you haven't gotten the money for your STAR exemption, you can go in and get the money yourself, and actually instead of waiting for a check. But that's it.
Right.
Right.
Yeah, and they promoted it as if there was some big, large change, but we're glad that they kept it.
Right. I mean,
And
that's true.
But
what they aren't keeping is the NY229.
Yeah,
right?
that's what I was going to say. We'd love to see that get renewed because that will help people in the future
Especially
as well.
seniors.
That's over and above the STAR program. And so if you're somebody that's been paying property taxes and especially if you haven't filed the New York return, you want to make sure that because you only have 3 years from the time you missed it to amend, to file the return to get the money. So if you're somebody that has property taxes that you've been paying and you knew you didn't have to file a New York return, you should look into this New York 229 because you could get a refund up to $350 for the last 3 years.
That's right.
Exactly.
Right, $250 to
It's
$350.
wonderful for seniors and
how
lower
many
income people.
low-income people or seniors or even middle class, because, you know, property taxes are only going up. They're not going down. Have we seen where they got this extra money for their refunds over the last 3 years?
Right. And so, but especially if you haven't filed a return, because if you haven't filed a return because you knew you didn't have to file a return, this is something where you want to file the return.
Or
so
Esther,
this is
I can't-
on New York only.
Yeah, and I can't tell you how many people have filed New York returns, and I've amended it because they didn't take advantage of it. So that too,
Right.
Yep.
Right. Absolutely. Okay. I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us with your comments, 716-8030930. Our school is coming up. Well, first of all, we're doing that seminar to help people with their budgets, and we're also doing the Ready, Set, Retire seminar November the 9th. And what we're going to do is we're going to put those two together because they're really so much overlap one to another. And so if you haven't signed up for the Ready, Set, Retire seminar with the financial guys, think about coming. I think you'll find it fascinating, mind-blowing for your own finances. And we're going to also do the Beating Inflation seminar at the same time. So if you're signed up for our Beating Inflation seminar, we're going to be sending you out a packet so that you'll be prepared. So when we start talking about the different things that you can do to reduce your debt and how to get some tax-free money, we're not taking any more applicants for that. We're just combining it with the Ready, Set, retirement seminar, right?
Yeah, which I think is a good plan. Then you can knock out two things at once, and the topics are related.
Right.
Yep.
Absolutely. Okay. And again, tax school is coming up. We want to make sure if you are somebody that thinks you'd like to learn taxes, I'm going to tell you there's nothing that impacts your life so much as to understand the basics of income taxes. And we have a wonderful tax course starting in October, right?
Yep. The class meets twice a week, either in the mornings or evenings. It's free of charge. And there's also an online option. It's a great opportunity, as you said, to learn taxes from A to Z. And the hope is that you'll come work at one of our more than 30 offices. It's just a great opportunity. I know I was talking to somebody yesterday and she's like, I'm ready for a change. Well, if you're ready for a change, I can't tell you what a great, fun time we have during tax season.
Yeah, it's a great, if you like helping people, this is the job for you.
Yeah, that's for sure.
For
sure. Okay, I wanted to, the other day I was on a plane and I was sitting next to this lovely couple and I couldn't help but overhear them talk about they were going to get this rental property and they're going to get all these write-offs and said to her, how are you doing? I said, I'm freezing to death. I'm freezing too. So we struck up a conversation and she said, what did I do? Well, she's a doctor. Her husband is managing a big company. So I knew that their income would be over $100,000, probably well over $150,000. And I said, I couldn't help but overhear you talk about this rental property because what you think is going to happen is not going to happen. So that's where I got the brainchild about talking today about how different things are taxed. And so just because you did something that you think you're going to end up with a tax write-off, you'd be very surprised how different items under tax law are taxed differently. So we're going to talk about that. And of course, anything you want to talk about. So anyway, I'm Esther Gilius, the tax lady from EG Tax. We have a text though, right, Tiff?
We do. We've got two separate texts. The first one, or it's the same person, star equals amazing government help. And then the same person texted, how are illegals getting DMV licenses, no test needed, tied to voting? Same person.
Yeah, well, okay. So obviously, anytime the government gives you a tax break, and in this case, it's on your school bill, that's a wonderful thing, right?
Yeah.
But bear in mind that the number 3 tax state in the United States is New York. So New Yorkers are paying a large chunk of of income tax, property taxes, sales taxes, and so on and so forth. We just wanted to make sure we clarify that this big press release yesterday was not any new money.
Right, yeah,
didn't
we
want-
weren't
We
saying-
don't want to mislead people.
Right. We weren't saying it was bad what she
It's
did.
not
We were
bad.
just saying it was misinformative because it's not new. It was just
Right.
a
Absolutely.
reissuing.
We don't want, because the news people are calling us saying, "Oh my gosh, is this all?" No, it's just the same package with a new bow on it, right?
Exactly.
Basically, which we're happy for, thrilled, really.
Right.
But it's just the same package with a new bow. Anyway, we're gonna take a short break for some commercials. We'll be back with your comments, questions, and phone calls. Hey, to us, you are family, and I just want you to know that as we roll into fall and there's all these family gatherings and it starts to get cold outside, and you have tax questions, people are always talking about taxes. You can always get a hold of us at EG Tax. You can go to our website at egtax.com, ask the tax lady. I will answer all of your questions. Or I'll have you call us because sometimes the questions are so difficult to answer because there's all these pieces and parts to it. So we want to help you. Think of us as your family.
Right.
Because that's how we think of you.
Yeah, don't listen to the neighbor over the fence because, they may know a little about taxes. Ask people who actually do taxes for a living so you get the right advice and the right planning so there's no hidden surprises come next year.
Well, that's exactly what happened the other day on the plane ride, right? They're
Yep.
telling me that their brother has rental property and he gets all these write-offs. And so I said, that may be true, but your brother has income of under $100,000, or he's a real estate professional because that's the law. And it was interesting because listening to their brother, they thought, oh, they're going to buy this rental property that they're going to be living in most of the year, and they're going to rent it out for 2 weeks, and they're going to end up with a big write-off. So it's interesting. You get the worst advice from your friends and neighbors. They don't mean that. This is what they think, But thinking of this, when people are talking about what their tax bracket is, depending upon the type of income that you have, that may be the only thing that actually falls into that tax bracket. For instance, wages. Wages are fully taxable. Of course, you're going to have your standard deduction and reduce it by any credits, but your wages are taxed as regular income. There's no razzle-dazzle with wages. It is what it is. Unless you're in an enterprise zone, and then on New York State, it's completely tax-free. Right?
Exactly.
So if you work in an enterprise zone and you're in New York State, you don't pay any New York State taxes.
Which is
So
great.
on the federal, you'd pay at a regular rate, but on New York State, you'd pay zero taxes. Same thing with interest income. Interest income, again, fully taxable, no smoke and mirrors, unless it's a municipal bond. And then how is that taxed?
Muni bonds are tax-free on the federal. And then on the state, if they're issued from New York State, a county inside New York State, a city inside New York State, then it is tax-free on New York. If it's issued from anywhere outside New York, you have to pay tax to New York State on that.
All right, so interest income is fully taxable, and that's what we said. However, unless it's municipal bonds, how about if it's a treasury bill?
T-bonds are taxable on the federal and tax-free on the state of New York or whatever state you live in.
Right, so there you go. So we just said wages are fully taxable, interest fully taxable, except, right? Mm-hmm. Okay, we got some questions and some comments here.
Yep.
Why don't we go to our text?
The text says, "Hi, Esther. I read when cashing in stocks from a brokerage account, the capital gains tax rate is 0 if a married couple has taxable income under $94,000. If our income was lower than that, would there be any tax implications from cashing in a $20K from a brokerage account? Would I have to list the profit as income or pay income tax on the profit or anything? Thanks, George."
All right, so that's kind of tricky, isn't it, you guys? Because
you need the
it is
basis.
true if you're in the under 15% tax bracket, then when you cash in or sell capital assets, that's supposed to be taxed at 0%. But what happens when the gain is added to your taxable income?
That could knock you out of that 15% tax bracket.
Correct. And so then it starts to escalate. So yes, it's true. If you're in the 15% bracket or lower, you'll pay 0% on capital assets. Again, that's another form of income that's taxed differently, unless that gain is large enough that it's bumping you up over that 15% bracket, because then you'll pay more. So what might somebody do who wants to sell something, capital assets, to make sure that they stay in that bracket? Chris, Tiff?
Sorry.
So what would they want to do? So maybe sell some losers too, so that your gain isn't that large and knocks you out of that 15% tax bracket.
Or spread it out over 2 years.
I was thinking that too.
We're now in the fall.
Yeah,
right?
or
And
if you're working, put more money in your retirement account to bring down your income.
There you go. In other words, you got to
Jackie.
make a plan. If you want to keep that at 0%, then, like Tiffany says, sell some losers so that the gain isn't so large. Sell it over a period of time. Put some of it in 2024, some of it in 2025. Increase your 401k plan at work so that that money is sheltered, so it isn't out there to be taxed at the higher tax bracket. And those are things that we help people with, right?
We do.
That's right.
Yeah, a lot of times we'll do conference calls with your broker and we'll have a third party call to see where you are, to see if there are some losers, to see if you should spread it out over a few years, to see what your basis is, to see what your gain is.
And they might want to, if they don't have a pension plan, or maybe the wife doesn't have a pension plan, put money into an IRA. That would reduce it too,
Correct.
right?
Right.
Or even if their health insurance, if they have a high deductible health insurance and it's not employer provided, they could put money into the HSA.
That's right.
That's right.
Right?
Yep.
I mean, all of those things will reduce your adjusted gross income and your taxable income, so that when you put that capital gain in, it reduces the taxability, hopefully. But that's all a plan, and we help you with that.
We do.
All right. What else we got?
Should we
there?
go to Patty?
Yeah, we should.
Okay. Hey, Patty, how are you?
My question is on the STAR refund. If you don't have a computer, how do you get to the portal?
They'll mail you a
get the
check.
Then you just have to wait. They're going to mail you your check.
Or you could use a friend's or go to the library.
There is a phone number where if you call us on Monday at the office, we can give you the phone number for the STAR program and see if I know they can register you over the phone for the STAR if you don't have a computer. So I'm assuming, and we all know what happens when you assume, but I would figure that they could take your account information over the phone as well for a direct deposit.
But Patty, they are mailing out the checks. If you just, if you can wait, you should get it.
Also?
Last year.
Was
she
it
said.
available last
Yes.
year also?
Yes.
Uh-huh.
It was. If you
Did
qualified.
you file a return, Patty, last year? New York State return?
Yes.
You did. Did you get the 229? The refund of the
that?
property taxes on New York State?
No, I did not. I did not.
Or did you apply for it? Did you try it to see if you qualified?
No, I didn't.
Okay, you know what? Why don't you call us Monday, because we'll take a look at this for you. Maybe we can dig up some more money for you.
Thank you very much.
All right,
Call-
Patty. Our
call-
phone number is
yeah.
632-7886 at the office. 632-7886. I know there's no phone books anymore, right? So she can't look it up, and she doesn't have a computer. So
Yeah, Right.
632-7886.
And ask for Chris. He'll help you on Monday.
Right. And then what else we got? We got another text?
We do. So, hello. So if I get the enhanced STAR deduction in the yearly tax bill, that's considered the total STAR for the year, no additional check. Am I right? Thank you.
Isn't
And
that
I
correct?
think he
That
is
is-
correct.
that is correct,
The
because-
So you
deduction.
either get it in your taxes or in a check or now in the portal.
Right. So this guy would not get an additional. The savings is in the reduction in his property taxes that he sees
And
every
then
year.
we got another quick text.
We do. What determines whether you receive a check or a credit on your tax school bill for STAR program?
But
Chris,
there's
are you well
You have
versed
to-
in that?
the school
there's
budget.
there's a lot of different variables. The first is, are you a homeowner? And second is, where do you live? How much school tax you pay? How did your school district do with their budget? And then they look at your income. Where a married couple, it's 500,000, and I believe a single couple, a single person is 250,000. If your income below that, then you can qualify.
That's a lot of
So
money.
there's a lot of different variables. It's not just a simple yes or no, you qualify.
Yeah.
And they can call their municipality and they'll tell them, right?
Right. And obviously the size of your check also is determined by where you live as well. Where somebody in West Seneca, Cheektowaga, Clarence, Williamsville that has super high property taxes, their STAR rebate is going to be a lot higher than someone in Buffalo.
Hey, and Esther, and Chris, I'm in my car a lot during the week, and I was listening to Jay. He was filling in for Tom Bowerly, and Jay is a younger family guy. He's got one kid, and he said when he got Kathy Hochul's advanced of the Empire credit, he was so disappointed. He said
Oh, that's a great point too, Tiff.
Yeah.
We wanted to talk about
Yeah,
that.
he read that he
that
would
was
get-
another misleading thing.
Yep, he read that he was going to get 100%. He read it. And when he got the check, he was like, I had to go do DoorDash. He goes, I was planning on more money, and I didn't get very much money. And
Right,
so,
because that phased out based upon your income. And they didn't mention that from the get-go. But so if you were somebody that was looking for that additional child tax credit from the state of New York, there was a phase out based upon your income. So so the lower your income, in order to really benefit, you had to have low income.
Right, and they always did they only went up to 50% of that what you had on your tax return
Right.
anyway. So,
yeah, so they got money. It's a married couple, but they only got 50%. He was reading that he was going to get 100%, and then he read it was on line 19. Chris is telling me to shut up, and we'll talk about this on the other side.
Well, that's because we got the news. So we're going to take a short break for the news. 8030930, 8030930, star 930 on a cell phone. Hey, to us, you are family. I'm Esther Gilius, the tax lady from EG Tax, joined in studio with Christopher Fabian, Tiffany Fabian, and we're kind of talking about how different financial things that you include in your tax return income, so to speak, are taxed differently. And we're talking about your texts and your questions. And our phone number here in studio is 8030930, 8030930, star 930 on a cell phone. And you can text us at 716-8030930. Wanted to move on to dividends. If you have qualified dividends, they're taxed differently. They're taxed like capital gains. So again, if you're in that 15% bracket or lower, you will pay 0% in income tax on your qualified dividends. But if you have non-qualified dividends, those are taxed just like wages and interest. Now, because qualified dividends are taxed at 0%, let's say you're somebody that has money in interest in a savings account, you might want to consider moving your money from savings interest, which would be taxed at regular rates, to stock, so that you get dividends, so that instead of paying income tax on your interest income that you're getting, that you have dividends, and that's at a 0% or a lower rate. Maximum rate is going to be 20% on capital gains. So if you're in the 37% bracket, you'd save 17% by moving from interest-bearing account to a dividend.
Yeah.
So something to think about.
Yeah, and then Esther and Chris, circling back a little bit, you guys were talking about muni bonds just a minute ago, and in the news not so long ago, in the Buffalo News, was the bonds for the Bills Stadium and, the ability to buy these bonds. How would those be taxed, the interest on those bonds?
Well, that's a New York State obligation. So that's going to be taxable on the federal and tax-free on New York State.
Yeah, correct.
So-
Cool stuff.
Okay. All right. We got some text. We got lots of text.
No, well, we got a phone call and a text, and 2 other phone calls that I'm working on.
Okay.
Go on, Chris.
So we got, the text is, hi, just tuned in. Always a great show. Any info on the IT 229 for 2024? So
Now, you were talking to one of our representatives yesterday, right?
yes, I was talking.
And he like said the 229.
Yeah.
He did.
No
The
one's
what?
talking. What
The
is that? No one's
229?
talking about it. So I did send them the 229, and I said I would love to see this get renewed to help seniors and lower income people on their tax return, because it was a great savings for them.
So this was over and above the star.
Yep.
And if your adjusted gross income on your New York return was more than 6% of the property taxes you were left paying, then they sent you a refund if you qualified. Then there's this computation of between $250 and $350, right?
Correct.
And that was 2021, 22, and 23. It expires in 24.
Yes.
And so that's a big tax increase.
It is. Yeah. So if you're listening out there, no matter if you live in Rochester, if you're streaming us in New York City, Albany, call your local state senator and say you want this renewed.
Right.
Get your voice
it's property
out there.
tax relief.
Yeah,
right?
229. It was a great
It's an
savings.
IT 229.
Yeah.
It's a refundable credit.
Yep. I wish Kathy
Okay.
Hochul
All right. What
would
do we
get
got
on
here?
the-
We got
line
Jim
one.
from Buffalo.
Hey, Jim.
Hello, how are you?
Great.
I'm going to be turning 62 in January. I'm going to be retired, and I bought an income property, and I do have an LLC with my son-in-law. We repair houses and then we sell them.
Okay.
Do I have to? Is that income go against my Social Security?
Yes. All right. So several things. First of all, you and your son have to do a BOI, which is you have to report to the fraud network that you and your son have a limited liability company, and you have till the end of the year, unless you just formed it. Did you just form the LLC, or was it in existence
No,
before?
we've had it a couple of years, and every year we've had tax a form done on what we've
No,
made.
this is
in the
brand
LLC.
new. This is brand new as of January. And if you fail to do this BOI by the end of the year, there's going to be up to a $10,000 fine. So this
If
is
you're
a big thing.
incorporated.
That's number one. Okay. Number two, the net profit that you guys have, because you have a partnership, if you're making money, then that's going to be added to half of your Social Security. Are you single or married?
I'm married.
All right. And does your wife work?
She works part-time, yes.
And her income's going to be part of the mix. When you add half of your Social Security, plus your pensions, plus your wife's half of your wife's Social Security if she has it, plus her wages, plus any other source of income, you add that together. If that answer exceeds $32,000, then half of the excess over 32 is going to be taxable on your Social Security.
Yeah, and don't
Up
forget
to 85%.
half obviously of the profit from that LLC goes to you, and half goes to your son-in-law. So
And also,
Correct.
Since you are flipping that is considered self-employment, so that net profit is subject to Social Security and Medicare tax.
So that'll
As well
count
as
towards
income
my,
tax.
32,000.
he's
That's
wondering if
correct.
that'll super-
And over and above that, you have to pay FICA on the net profit.
Yeah. How old are you,
62.
Jim?
61.
I'm 61
Oh,
right
boy.
now. I'll be 62 in January.
Yeah. See, that may kick in the payback of Social Security if your
Right.
net profit. So you guys want to really try, for your sake, to bring your profit down as low as possible, so you don't have to pay back any of your Social Security.
Or not collect your Social Security.
Yeah.
Because
What is
your
the-
wages, your net profit is going to be limited to around 22,000, and if it's over that, then you're going to have to pay back $1 for every $2 you get in Social Security. So you want to make sure that you don't start collecting if you're going to have to start paying it back.
I would call us on Monday or Tuesday, Jim, and just have us run the numbers and
This
see
is
where
Joe,
you are.
right?
Joe.
No,
Jim,
for
Jim.
Oh,
It's
this is
Jim.
Jim.
Yes. Yeah, I'd like to call you and come in and sit down with my
Yeah,
wife.
no,
and
there's no
myself.
charge. Happy to help you, but there's at this juncture, with all of this mess on the table, you got this part, this part, this part, this part, and this part. You want to make sure that you see what the overall effect is going to be.
The phone number at the office is 632-7886, and we'd love to help you.
Okay, Jim?
Okay. I appreciate it. Thank you.
All right. You're welcome.
It
sir.
is fun, though, flipping houses, isn't it, Esther? I mean, it's a
I
lot
love
of fun.
flipping houses.
Yeah, and to do it with your family member, pretty cool. Pretty cool. Good stuff.
All right. And then we have Joe.
Yes.
Yep.
Hey, Joe, how can we help you?
No, I was just listening, Esther, about that thing with that fella that just called in. So he worked all his life, paid into Social Security. If he goes to collect Social Security and he's making a couple extra bucks, they're going to take it from him and give it to the people that never worked or don't intend to.
Very well said.
It just blows me away.
Yeah.
When I heard.
Well, I will say this. That's one of the things that Trump is talking about is the elimination of taxes on Social Security benefits.
And you
Of course,
never
he's
try to
talking
get
about a lot
political.
of stuff. I mean, I think that kind of he's being very generous. Somebody's got to pay the taxes here, but he did talk about eliminating
For
taxes on
seniors.
Social Security.
Yeah, that'd be great. The other question is, I was wondering is like, how many people do you see, you do all these taxes, how many people are getting hurt by doing that, by collecting Social Security and working? Is that a lot?
Okay,
people
so
really try to
once
plan.
your normal retirement age, 66 and so many months, once you hit normal retirement age, you can collect Social Security and you don't have to pay it back because regardless of the wages that you're making. His problem is at 62,
He's not
if
at
he
full.
starts collecting his wages from his partnership, if it's too high, it may make him start paying back part of his Social Security. But
Yeah, I know, but
but is 85% taxability of Social Security often? Yes, a lot.
Yeah, what I was saying is, so from 62 to 66, that's the window where they're going to hit you. Even though
if you're still making substantial money, yes. Not
Even
if,
though
now
you-
it's around 22,000 this year. It's going to be like 23 next year. So if you're making less than that, it's not a problem.
Yeah, but if you're collecting at 62, you're getting a reduced Social Security.
That's true, but believe me, if you put all the numbers to it, if you don't collect, if you're not working and you're not collecting Social Security, it'll take like to 85 to equal what you left on the table, and they're not going to give it to you. And should you predecease that figure at 85, then it doesn't go to your estate. So that's another complicated thing.
No, as far as I'm concerned, you're crazy not to collect at 62.
I agree with you completely, Joe.
You don't even know what's going to happen. The other question I had was with the school tax. Okay, so I live in East Aurora, but I'm Iroquois School District. They think everybody's got a money tree. Every year they raise the school taxes. So I got the school tax the other day. It's like $6,000, and then the star exemption was $336. Almost
That
like a
much.
joke. Is that,
I'm
is that a
tongue in
joke?
cheek.
That's a
Is
joke.
that a joke or is that or what?
That's a joke.
Yeah, I mean, at least it's something. But, there's a lot of variables. It's just how that school district did with their budget.
Which means not so good.
Yeah.
They've been over budget for the past 25 years.
Wow.
And sometimes it's way worse than others. But the other thing is, I just thought is that's the norm that they'll send you $336.
Yeah, somewhere around
Somewhere
there. That's
there.
what mine and my wife's check was
Right.
Yeah.
for.
Yep.
One other question. When you turn 65, does it go up quite a bit, or is it based on your income still?
You'll get the enhanced star.
No matter what your income is?
Well, the enhanced star cuts off at around
75.
78,000
Yeah, right.
Is that per person or for a couple?
per
That's a
tax
couple.
return.
Yeah.
And it's much more significant, the savings. And then if you were in the
78,000.
military, you get a military discount.
Volunteer firefighter.
Volunteer firefighter. But it's much more
what I said was,
significant.
if you make more than 78,000 as a couple, you're not going to
That's
get
correct.
the enhanced.
You don't
Well,
get the
this would
enhanced
be
star.
your New York State adjusted gross income.
New York.
Oh, New York State.
This
So
is
if
New
you,
York
like, say
State
if you're-
because the enhanced star is based upon your New York income.
Or your New York income, that would be Social Security if you just have Social
Well,
Security.
there
through
is no taxable Social Security
So
on
the-
New York State.
So it'd be 78,000 unless. Okay.
So
I
it would
understand.
be your IRAs, your interest, your dividends, your pensions, after exclusion.
I don't want to get a lot of texts and everything. It does count your Social Security income. It doesn't.
You mean you're talking about the enhanced star?
Yes, it
I was
doesn't
talking
count.
about the adjusted gross
Yeah,
income.
yeah.
on New York
It
State.
doesn't count your IRA distribution, only
Right.
the growth in your IRA that year. So there's a lot of different
For the enhanced
twists
star.
and turns for the
Right.
enhanced star. Yes.
Oh, so like say your Social Security, do they like say if your Social Security is like 60, are they going to like say, oh, that's part of 78, so we're going to cut it down to, or is it 78?
Well, it's
Yeah.
kind of an all or nothing at all, isn't it?
Well, yeah. If you're over 78, you lose it.
Right.
There's
It's all or
there's not a
nothing at all.
sliding
It's not
scale.
a phase out.
Okay, so but what I'm saying is from basic star to enhanced star, how much is it? Does it like double?
It could double. It could even cut your property taxes in half. What we've seen.
You're saying.
So,
It's
I mean, the
significant.
best thing to do is call your town and see what they
Right,
tell
it's
you.
quite
Call
significant.
Call your school district, your town, and find out how they do the computation and how much you would save.
Oh, okay, because I was curious. So that's 65.
Yes.
Yes.
That would,
yes.
if you
As soon as
qualify.
if you're a married couple, as soon as the first person reaches 65, you start to become eligible for it.
What if somebody's deemed to be?
Oh, you must
Oh,
have a
I
bad cell
lost
zone.
him.
Bad cell zone.
Yeah,
Did you want to
so-
go to a
Anyway,
break,
yeah.
Esther?
All right, so
and then Mike
right,
and
I know,
Joe?
but very quickly, you want to make sure that with these adjunct kind of credits and deductions on your tax bill, your property taxes, that you checked with your municipality, because so much of it has to do with your municipality's ability to reduce the school taxes. And it's really good, like what Joe is doing here. If there's a way for you to get around losing that or to qualify for it, you want to do it well in advance, because don't they go back the year before? for that?
Yes, they do.
So that's why you want to make sure that if you are looking at that enhanced star, that you do it now before you are hoping for it, because they actually look at your income from the previous years, not this year.
Yep. And you want to do a break and then
Well,
talk
we're
to
going to
Mike
take a
and
short
Joe
break. I'll
on
be
the
back
other
on the other
side.
side.
Oh, yeah.
I guess they're going to be playing again, right? So I've got to find a closet to hang out in.
It's
for a
Monday.
while.
It's Monday this week.
Yes, well, I hope the Bills win.
Yeah.
I wanted to go back to this enhanced star thing. In the year that you turn 65, you have to apply for the enhanced star by March the 1st. In 2024, you can have qualifying incomes of $98,700 if you're age 65 and older or less in order to qualify for the enhanced star. And the enhanced star is based on the first $84,000 of the full value of your home. So I looked it up.
There you go.
This way we don't have to guess.
There you go.
Okay, a lot of different numbers. All right, what else we got? here,
Mike
Tim?
in Tonawanda.
Hey, Mike.
Hi, Esther. I'm going to be 73 soon. Now, I have about $1 million in a combination of traditional IRAs and 403Bs. I'm going to continue to work in the future, just about enough to cover my legal IRAs, the limit on that.
Right.
Me and for my wife.
Okay.
I've heard that as long as I work, I can postpone RMDs. Is this true? Should I continue to work and put my wages into traditional IRAs?
All right. Yes and no. If you have existing IRAs, once you hit age 73, you have to start withdrawing your required minimum distribution. If you have a pension plan where you're working and you're contributing to that pension plan while you're still working, you don't have to do required minimum distributions on those pension plans. But everything else not related to your pension that you're working at now and contributing to, you would still be required to do your required minimum distribution.
Okay. I mean, I'm getting a pension, but this is a different job. So
Okay, so on your job, you don't have to do your required minimum distribution if you're contributing to that plan.
No, that stopped already because that's for different
All right,
plans.
if
So
it's an IRA, you have to do a required minimum distribution.
And
okay,
Or
and
a separate 401k.
Right.
and
and
I
those-
think
and
it's
those
I think it's a good plan that you're putting money into an IRA at your go on. I'm sorry.
and the 403Bs have to start taking money out of as well.
Yes, as long as you're not
Once you-
contributing
right.
to it.
Right. If you're not contributing to it, in other words, let's say I worked at EG Tax and then I retire and I go work at Jim's Widget Factory. The
Okay.
pension that I had at EG Tax, once I'm 73, I got to start withdrawing from it. At Jim's Widget Factory, if I'm contributing to that pension, I don't have to do an RMD on that because I'm still an active employee at Jim's Widget Factory. Once I retire from that, then I have to do RMDs everywhere.
Okay. Okay. Thank you.
You're welcome.
That was a very good example.
Good. I don't want to go work at Joe's Factory, but okay, and who else
We got
Joe.
another Joe.
Another Joe. Hey, Joe.
How you doing?
Good.
Okay, I think I can hear you. I got my. Okay, let me see if I can put this together.
Mm-hmm.
My mother passed away in 2023 at 97,
Okay.
and I paid her school taxes, and she had what was known as a life estate. So on her
Right.
death, it passes to me.
Right.
So I get my school taxes now in September, and it's $3,200. I'm like, where are you getting $3,200? They said, well, we gave your mother a $900 credit last year. My mother, not me, my mother, and we're just seeing that she passed away. We're taking that back and putting it on your school tax bill. Is that right?
Well, do you live in that house?
Yes.
Oh, well, what? And how old are you again?
67.
Okay. Did you apply for the senior star, like Esther just said?
Enhanced star.
The
Yes.
enhanced star?
Yes.
Something's not adding up.
I would take a trip down
The
to
town
my
said they did this.
municipality.
When I talked to the town, they said, well, the reason why it's 32 and not 23, which I still think is high, but after the break it'd be okay. They said that we put that back, not the STAR program, but the town put that back. And I just needed to know before I called them and say, hey, no, you got this wrong. That's my mother. She's passed away. This is me now. You guys made the mistake. I don't have to inherit her STAR credit.
Yeah, like Chris said, maybe they think you don't live there in that house. Maybe it's not.
No, they know I live there. No, they know I live there.
Then I think a trip down to the town is a good idea.
Have you gone there?
Okay. I called them on the phone and I said, why is this thing $3,200? That's 4 times what I paid last year. And they said, well, $900 of it is we took back a credit that we gave your mother. And I go, well, what does it have to do with me? And they go, well, we gave it to your mother. Your mother passed away, and we gave her it to her. We shouldn't have given it to her. And I said, well, that's on you. Why do I?
Well, no. Okay, so if they gave money, then if they gave money to your mother who had passed away and they shouldn't have, I understand that they would then take it back and give you, because you were the person that was living there. They should give you that credit then. Did they give you that credit?
No, it wasn't.
Yeah, well,
no, they didn't.
Why don't you call us, because we can call New York State Department of Taxation and Finance and find out if they have to make you whole.
Okay, well, do I just call the one on the boulevard near me?
Phone, call 632-7886 and we'll make a phone call for you.
Thank you.
You're welcome.
Bye.
Yeah, I mean, when you're dealing with a municipality, now this is the Enhanced Star is a New York State program, so they have to follow New York State guidelines.
Right. It might be that he didn't get his application in time to get the Enhanced Star.
That's why you won't know till you talk to somebody.
Yep.
Okay, so
And we got one more caller.
We got one more call?
Yep, Karen.
Hey, Karen, how can we help you?
Hi. On a previous show, you said that if grandparents put money away in a 529 plan for a grandchild, it does not count against them for scholarships and any aid that they would be entitled to.
They can do on a 529. They can front end load it up to $18,000 per year on their gift tax return. So they can actually give $180,000 up front, but for 5 years they can't use any more of the gift tax return. So they could actually do $180,000 up front onto a 529.
Would that also apply to like a great niece or only a grandchild?
It has to be a beneficiary. So any beneficiary.
Okay, so if I made the 529, the beneficiary of that would be my great niece. It would be okay.
All right, let's make sure, because I know for sure it's a beneficiary. Now I don't know what the perimeters are going to say if there's a cutoff point. So why don't you give us a call on Monday, and I'll make sure that a great niece would qualify, because I wouldn't want you to put something in that would be capped. Okay?
Okay, very well. I'll do that.
Call 632-7886. There's
but that's a real. I mean,
last
on the 529
text.
plan, you could put $180,000 for a married couple to fund a beneficiary. Now, I don't know exactly where beneficiaries
stack up. Okay. Some 401ks allow you to transfer. If you, Esther, transferred your EG Tax 401k, this is a text, to Jim's Widget 401k, could you avoid the required minimum distribution?
I don't know.
I would say as long as you're contributing, but that's a question we can look up until next week.
And we'll do that next week too.
Yes.
Okay, that's good. Okay, I'm Esther Golias, the tax lady from EG Tax. Our phone number at our office is 632-7886.
Oh, there's another text. By contributing from IRA towards donor advisory fund, can it help with lowering RMDs? Okay, sorry.
Yeah. Okay. And our email address is egtax@hotmail.com. Our website is egtax.com. If you need the very best tax help, and don't forget, extension deadlines are coming up, right?
Right.
That's right.
Give EG Tax a call. Thanks for listening, and go to those municipalities with those Enhanced Star questions too. We'll talk to you later.
The previous program was paid for by EG Tax.